Hello and welcome back, everyone. I am Crypto Strategy, and in today's video I am showing you a potential money printing day trading strategy for cryptocurrency that is fairly simple to set up. If you enjoy this type of content, consider subscribing, and if you learn anything from this video, please hit that like button. Thank you for clicking on this video and supporting the channel. Let's jump right into it. Real quick, before we get started, I just need to say that this video is not financial or investment advice. Do your own research and due diligence before buying or investing in anything. So, trading at its core is a game of statistical probabilities. All right, so this strategy I'm about to share with you only needs a 25% win rate in order to be profitable. Even in a downtrend, you have more profit than losses. All right, guys. We're going to be using the RSI for this strategy, and I know it seems unwise to use one indicator. However, this method actually made money, over 10% profit, while the market went down about 13% over the same period of time. And you'll see all this, guys. You'll see this later in the video. So some days we won't even day trade at all. All right, the market could be going up. We might want to FOMO in, but no signal, and we'll get into what the signal is. But no signal means no trades. All right, guys. You gotta be disciplined when it comes to this strategy. If you are not, you're gonna get wrecked, and I've tested it. You're gonna get wrecked if you do not follow it like this. You can tweak the rules how you want, but it's mainly about following the rule set that you set for yourself when you do a day trading strategy. And if you're wondering why my candlesticks on my chart don't look normal, it's because I'm using the Heikin-Ashi candles. Personally, I find that they give you a lot more information about where the price could go than your standard candle. So we're looking at the Avalanche AVAX USD chart on TradingView. And I like to use TradingView, I mean, who doesn't, to analyze the chart. And then I switch over to Binance US to make my trades. And on Binance US, you could set a stop loss and take profit. And we'll need to do that for this strategy. Now, obviously, you don't have to trade Avalanche for this to work, but you're going to need crypto. That's pretty volatile. And I think right now, Avalanche has a really good amount of volatility and volume right now. I think the volume is in the billions. So, I mean, you don't even have to worry about it pretty much. So here's some basic rules to follow for the strategy. So we're going to be setting our RSI length to 10. We're only going to be trading if the RSI is at or below 19.5. You don't have to set it exactly 19.5, but looking at the chart and looking at where the RSI went down, the spikes and stuff, 19.5 is a really good area where if you bought below it, more often than not, you would be profitable, and we'll get into that later. We're only going to be using 20% of the account per candle. So this means if you get an RSI below 19.5 on only one candle, you're only going to be going in with 20% of your account for a maximum of 5 entries of 20% each on the account. So if you have 5 candles in a row below 19.5 on each one of those, you'd be entering in with 20% of your total portfolio. And we're going to be setting a take profit at a 4-to-1 risk reward ratio. It's a pretty big risk reward, but when it's volatile, it's the movements are there. All right, so this means if I'm taking a 4% profit and I'm stopping out at 1% loss. Another thing you can do is you can take a profit for 50% of your portfolio or whatever you're invested in. So you had 2 entries, you would sell one of those entries, add a 2% or 3% profit just in case it didn't hit that 4%, and that would still guard you from that loss of that other half not getting to that full 4% profit. All right, so this is where the real money starts to be made, guys. You could have 15 trades. I did the math, guys. You could have 15 trades in a row, losing 1% of your account each time. All you would need is 4 wins, and you would have your money back and then some. So let's crunch some numbers so you know what I'm talking about. For example, we lost 3 times in a row at a full 1% of the account each time. So if we started with $1,000, we would now have about $970. Our next trade is our 4% win. All right, so your account would now be at about $1,009. So you not only wiped out those 3 previous trades, but you made a 0.9% profit on top of that. This is really the magic of the strategy. With a 4-to-1 risk reward ratio, 1 win would beat 3 losses, 2 wins would beat 7 losses, 3 wins would beat 11 losses, 4 wins would beat 15 losses. There is quite a lot of room for losses to be made, but you really don't even need that many profits. As you can see, guys, we have a much higher win rate than 25%. It's actually closer to 50%, but we'll get into that in just a moment. So let's look over these 16 days of trading that I've been studying and what moves would have been profitable given our setup. So each one of these yellow lines you see here represents the hours of about 5 p.m. to 10 p.m. every single day. This simulates actual time that would be looking at the chart. When we do the back test, it greatly reduces the noise, and obviously you can't look at the chart 24/7. So doing this actually, in my opinion, gives you better results, more accurate results when you're doing these back tests for yourself. So we'll be hypothetically trading with $10,000 because it sounds better than 1,000. Day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, day 10, day 11, day 12, day 13, day 14, day 15, day 16. So here are the final results. Overall, almost every time the RSI went below 19.5, there is money to be made. Out of these 16 days, 6 days resulted in no trades. 3 days resulted in losses, and 7 days resulted in profit. More tests with different market conditions need to be done, but so far, given the market in a volatile downtrend, it seems to be very profitable in a time where holding was very unprofitable. So over the 16-day time frame, you would be down over 11.5% if you had just bought and held over that time. If you had bought at 5 p.m. and sold at 10 p.m. on the trading time frame we had set, you'd actually only be down 2.9%. Using this strategy in a back test, so which isn't perfect, it's gonna be a little bit different. You're probably gonna see a little bit less than this actual number, but the back test came out to a little over 11% in the profit. So remember guys, your results could be different, and in real time this strategy may not work for you. Anyways, if you enjoyed the content, please like the video and subscribe. We are on our way to 1,000 subscribers. I will catch you guys in the next one. Peace.